we will discuss the unconstitutional tax on unrealized capital gains, proposed by the Biden administration in its 2023 budget bill. The proposal is to impose a 25% minimum rate on the unrealized capital gains of the wealthiest Americans. However, this measure is based on bad economic reasoning and contrived evidence. The proposal rests on the work of far-left academics who erroneously claim that wealthy Americans pay a lower tax rate, on average, than the poor. Apart from being premised on bad economic reasoning, the proposed wealth tax will also likely face another obstacle. It is blatantly unconstitutional. According to Article 1, Section 8 of the U.S. Constitution, the federal government can collect taxes, duties, imposts, and excises to pay the debts and provide for the common defense and general welfare of the United States, with the stipulation that these measures must be uniform. When read together with a separate clause in Article 1, Section 9, these two clauses divide the taxing power of the federal government into two categories: direct and indirect taxation. A direct tax, by contrast, must meet the apportionment requirement of the Capitations Clause, with one notable exception arising from a later amendment. Although the 16th Amendment authorized the modern federal income tax, it did not exempt other forms of direct taxation from the apportionment requirement. A tax on unrealized capital gains cannot be a tax on income, as no income is generated in the process, only an estimated increase in valuation. Thus, it is unconstitutional to impose a tax on unrealized capital gains, and the proposed wealth tax will likely face legal challenges. It is essential to understand the legal and constitutional implications of the proposed tax before making any assumptions about its implementation. Subscribe Libertarian Facts.